Our stock of the day is Polynovo. It's the burns treatment specialist, posting a record monthly sale of $7.2 million in May. The majority of that being sales in the US. Total revenue for the 11 months to May rising 54% from a year ago to just over $38 million. And as a result, if we take a look at the stock price, it has popped today. In fact, I don't have the exact figure, but it certainly was over 10% last time I looked. Carl, let's get your assessment of, particularly its move into the States has been impressive, and it's worked thus far.
Yeah, they've just launched, when I say just, in April, launched their main product, which is a sort of a burns treatment solution based upon a biodegradable matrix, which you apply to the wounds. It helps the body heal faster than conventional procedures, and then it obviously biodegrades at some stage. And it is, very highly regarded by the physicians who are using it for other applications as well. They see that, you hear a lot of reports back via Polynovo, of course, that physicians are finding other novel ways to use it. So the product works. In terms of Aussie biotechs, it's a little bit unique in that they're not at phase 2 or 3 trials trying to battle with the FDA to get something approved. The product's there, and even better, it's being sold. Money's coming in the door, and profits aren't too far away. When I say aren't too far away, order of magnitude, let me tell you here what the big brokers are forecasting. FY24, so we're in FY23, we're nearly at the end of that, obviously. So to June 30 next year, a break even, okay? That's not a bad thing. It doesn't mean you can't invest in a company that's only breaking even, because the growth in earnings means that the year after that, in FY25, we're going to go from earning 0 cents per share to earning 2 cents a share, which doesn't sound like a big jump, but then the year after that, you're earning closer to 4 cents a share, and then it goes from there, okay? So you're paying 80 times, to boil it all down, 80 times FY25 earnings. And for some people, they'll say, oops, no, that's where you lost me, Carl. I'm not prepared to pay 80 times the year after next year's earnings. It's too risky for me. I get the growth story, but that's not what I'm looking for. I'm looking for some dividends and some capital stability, and, tell me about some of those. So it's more for your growth investor, somebody's prepared to sort of hold through the execution risk in them achieving those sales, and the product still maintaining its relevancy and attractiveness to physicians over that time frame. And there's some risks there. But if you like growth, and the market does like growth, then it's one you could look at. So I like the business. I like the valuation. I think the valuation's reasonable for the growth that's in the business. And then the third place I go is to the chart. And I say, well, if I get the first 2 ticks and the chart is showing a nice uptrend, which means that it's not just me that's seeing the benefit of owning this company, the rest of the market is, then I'm happy to buy it. I'm not seeing, and that's where this one falls down. So we've still got short-term, long-term downtrends. The price action predominantly lower peaks, lower troughs. We don't want to see those falling peaks and troughs. It means that there's more supply in the system than demand. And this could have been a case of sort of buy the rumor as they were getting closer to launching in all those big geographic regions, and selling the fact. I don't think the valuation is unreasonable, but until it starts to push higher, say 180, with some nice white candles. Viewers have to watch out for those white candles. I can't really get too excited about it. But look, if you've got it, hold it.
Yeah, okay. So you're watching it, in other words.
Yes.
Yeah, great. Okay. Michael, yeah, as Carl points out there, biotech, it's such a difficult space to be in, isn't it? But they have actually, got that approval. So that's the first huge step for them. But the next path, obviously, to profitability.
That's right. I think this technology first emerged sort of after the Bali bombings. Historically, to treat burn victims, they would use pig skin, but over time they've come up with this mesh technology. There's also spray-on skin that some others do as well. So it is a somewhat of a competitive space. It's very much a trading position for us, for clients. We sort of watched this one for over 5 years, and we've been in and out a number of times. It tends to be quite a volatile stock. It'll take off for certain reasons and pull back. It had a tough time during COVID, because that's when it was sort of emerging into really the commercialization phase, trying to get out and sell this to clinicians and doctors. But obviously that was restricted during that period. They've now raised some cash at the end of last year, which gives them a nice little piggy bank. You had the chairman buying stock at around $1 last year. That put a rocket under the share price. Then he's recently sold a big chunk of that position, so then you see the share price come down. So it does move a lot on the news flow, this one. The company is very good at keeping the market updated. As an investor, it's somewhat difficult to decipher what's actually meaningful sometimes and what's just being put out there to generate interest. But every month at the moment, the sales momentum and sales growth numbers are very, very good. This month it's breaching the $7 million level. Last month it was breaching the $6 million level. So they're continually updating the market, and there's no doubt the momentum in those sales numbers is very strong, looking to become profitable in FY24. So even for your more risk-averse investors, I'm not saying for your totally risk-averse investors, but even for your more risk-averse investors, it's sometimes good to see that pathway to profitability. It is in touching distance. So for us at the moment, we're happy to hold it. We're not jumping up and buying it, but it is one that we have traded a lot in the past.
Yeah, interesting. Okay. All right. Well, that's a double hold then for our stock of the day.